Good afternoon, everyone, and welcome to Stock Market Today for Wednesday, February 11th. My name is Ken Shreve. Well, interesting day for the stock market. Initially, a fairly strong reaction by the market to a better than expected January jobs report. We did give away early gains in the stock market today, but ended up being a kind of a calm day for the stock market. Small caps lagged for a good portion of the session, but the Russell 2000 did manage to close off lows. We'll get into all that in just a little bit, but let me bring in our news editor, Ed Carson, who, as usual, has got three stocks to watch. Good afternoon, Ed.
Good afternoon, Ken. I want to take a look at Apple, Google, and Delta Airlines.
Two large cap techs and airlines under some pressure today. So we'll take a look at Delta Airlines. But before we do all that, let me pull up a chart of the major stock indexes here, and we'll start by taking a look at the Russell 2000. You can see the Russell 2000. It was up close to 1% intraday. We had the jobs report. We were looking for some much needed good news. We've had a job market that has been softening, and we did get better than expected jobs data for January. Russell 2000 did come down and touch its short-term moving averages. It did close off lows, uh, settled for a loss of about a 0.5%. And then the rest of the market, Nasdaq composite here, it was volatile. It traded up almost up about 0.9%, and it traded near its low for the day. Only ended with a loss of about 0.2%. Same with the S&P 500. Not much movement there. That closed with a fractional gain. Looks like that's mostly unchanged. Still near highs, just below that 7,000 level. And then the Dow Jones Industrial Average basically unchanged as well. So the major stock indexes basically flat on the day, kind of swung back and forth, but the Dow basically flat, slightly just down about 1/10 of 1%. So we'll start with the Nasdaq. Ed, still perched underneath its 50-day moving average. Did get higher volume, but we're going to avoid a distribution day. We don't need any more distribution days on the Nasdaq. We've seen enough of them in recent days. Still an index under distribution. Obviously, a kind of a bifurcated market here. Seeing NYSE stocks doing very well. Had some decent earnings reports among some Nasdaq listed companies today, but still stuck underneath the 50-day moving average here. Not too far off highs, but still probably the troubled index at this point.
Yeah, I mean, it shows we still have a divided market, and software was particularly weak today. I think chips were pretty strong overall.
Yeah.
There's definitely some. So, I mean, the stronger part of techs was strong. So it wasn't as bad as you expect, but it's still sort of split. And that's just the way this market has been. And the Nasdaq has sort of been the laggard for a while. It's not just that it's gone sideways. The other indexes have hit new highs along the way. They're not at highs today. You can see the relative strength line has lagged basically since October. Not terribly, but yeah. So this is the weak part of the market, and you just have to be aware of that. If you like fish in a particular pond and there's no fish there, maybe you go down the shore a little bit. I don't know.
Yep. Yep. And here's the S&P 500. We're saying the S&P 500 just holding up near highs, still holding above its 50-day moving average. And then again, when you just look at that advance for the NYSE. You can see just in a nice strong uptrend here compared to its 10-day moving average. This is the advanced decline line for the NYSE. So take a picture of that, and then when you look at the advanced decline line for the Nasdaq Composite, well, it started to swing a little bit higher, but it really has just been on a downtrend for quite some time here. It's just really just a picture tells a thousand words here, and we've seen small caps outperforming here. Here's the Russell 2000 ETF up near highs, and then some of your broad-based indexes, the NYSE Composite still hitting all-time high at that up 4 days in a row, and then your mid-cap index, the Russell, excuse me, the mid-cap 400, that was down a little bit today, but still seeing broad-based strength underneath the market. We had breadth in the market today. At one point, the breadth on the Nasdaq was slightly more than 2 to 1 negative. That did improve as the day wore on. It was ended less than 2 to 1 negative. Breadth was actually positive again on the New York Stock Exchange. You can see RSP actually was up 0.2% today, so that was good to see. What about this jobs report, Ed? Earlier today, the economy created it was 130,000 jobs, and that was almost double expectations, I think. And the unemployment rate unexpectedly fell. That resulted in a little movement in that 10-year Treasury yield after a precipitous drop in recent days.
Yeah, I mean, so there's a lot of things. I mean, it was 172,000 private jobs, though almost so that was good. Though almost all of those jobs, once again, were in the healthcare and leisure areas, which are lower paying, and also a lot of that's reflecting the aging population, honestly. But manufacturing jobs did tick up. Yeah, it was a strong report, but it's also the yields went up a little bit. Fed rate cut odds, which were starting to come into April, those got pushed back more towards June. But again, we have so many reports. We have the CPI on Friday, but we have so many monthly reports before
Yeah,
April, let alone June. I don't think, again, the whole market was sort of sideways. I mean, RSP has been outperforming. One thing on S&P is that it would not take much of a gain. We almost hit our record highs today, but we almost hit the 50-day line. I mean, and it was a very tame day. It would be easy. I could imagine an upside or downside reversal where we hit new highs, undercut the 50-day, or do one or the other. We're that close. So it really wouldn't take much for the S&P to make this market look a lot better or a lot worse with really honestly a modest move. So that just makes it difficult, all around.
yeah, yeah. You mentioned semiconductor stocks. It's interesting to see the Nasdaq below its 50-day moving average, but to see the SMH, the VanEck Semiconductor ETF, still really a picture of technical strength here. Recent support at the 50-day moving average. This is up near an all-time high. We had a nice earnings report in the chip equipment group today from a little known name, Advanced Energy. Nice gap up for AEIS, and you can see this chip equipment group number 4 out of 197. It seems every time you see an earnings report in the chip equipment group, it's a really nice earnings report. So lots of good news in the semiconductor industry. Just does not seem to be spilling over into the Nasdaq. You know but I don't know if there are any other big movers in the semiconductor group
I mean, there
today,
was
but at least
Micron, which is
advanced.
in SMH. There was which was just moving. The memory names were up.
Yeah,
I think there might have been a price target hike, but there was
data storage
LSCC.
had another good day today.
Yeah, LSCC had it was a lot. That was a strong earnings move and a lot similar chart pattern to honestly sort of a little
Big earnings move.
consolidation.
Yeah,
Yeah, so yeah, a lot of things with software that's still bad, and again, some of the mega caps that aren't doing great. And so, but yeah, chips are still strong. Some of the AI infrastructure is looking pretty
I think
good.
Global Foundries.
That's
Here
right.
was another
Yeah.
one in the chip making group. Yeah, Global Foundries up 16%. So some nice earnings in the chip space. And I know in the chip equipment group tomorrow morning, NVMI. This is another strong performer. They're going to be coming out with earnings tomorrow morning, and then Applied Materials, a big bellwether bellwether in the chip equipment group. They're going to be coming out tomorrow night. So more earnings in the chip space to keep an eye out for. We did see financials lag quite a bit today. This was the worst performing sector, XLF down 1.5%. This is testing its 200-day moving average, XLF. What's going on with the financials?
Well, we had that same problem. We talked about Schwab yesterday, and Schwab continued to fall. Most of that AI disruption fears continue to hit a lot of those names. So Schwab and others.
Hmm.
But I also saw like J.P. Morgan and Wells Fargo. They had sort of modest declines, and they had a little bit bigger drops, falling through their 50-day lines this time. So a little bit more damage on that front. Now, maybe there was a little bit
Hmm.
narrower yield spread. There might be other things going on, but obviously they have big wealth management arms. It's just there's just so much disruption fear. Yeah, again, it just changes everything. We sometimes talk about bullishly, oh, when companies guide, way up on earnings, and then the market is racing to catch up. It's like, oh, I just didn't understand the story. But sometimes it can go the other way. If you fundamentally think, well, wow, maybe a lot of this stuff is going to go away, that really changes the valuations of a lot of these companies that have really been relying on wealth management for growth. So I mean, we'll see what happens, but I think that's the big thing that's hitting the financials this week.
Yeah, JP Morgan, Wells Fargo, Bank of America, all top holdings of XLF. They all reversed lower below their 50-day lines today. Finally, let's take a look at jets because this did not have a good day today. Airline stocks broadly lower. We do know that Frontier Airlines ULCC had a bad earnings report. I assume this weighed on the airline stocks. Jets down 3.3%. Had been showing excellent relative strength, including a very strong move on Friday, but Jets under a lot of pressure today.
Yeah, I don't know if that's sort of odd because a lot of the bigger carriers are international flights, the premium, so it's sort of not what Frontier does. And we saw cruise lines down too. So stuff that you wouldn't have expected. I mean, ULCC stands for basically for ultra low cost carrier. Uh, so I'm not
Yeah.
sure what's going on, but that also shows you just how the nature of the market is that you have to be careful. Things may show some movement, but man, I mean, be incremental, don't get too concentrated, and some of these things will work and then you can hold on to them, with the market ups and downs, but others you might have to cut pretty quickly. And this was, if you bought the breakout, you're down 4%. You don't have to sell on RCL, but it's just unfortunate because it was looking really, really good, just a day ago.
Yeah, yeah. So yeah, airlines under some pressure, jets under pressure today. Let's start by taking a look at Delta Airlines. That was one stock you wanted to take a look at today. Mentioned broad-based weakness in the airline group, DAL. Here is another stock that on Friday made a very bullish move, arguably actionable when it crossed that recent high of 73.16, but fairly sizable drop today, down 4%.
Yeah, and again, we don't know exactly the reason why, but sometimes you don't know why. I mean, I don't know why it
Hmm.
surged that day on Friday. People don't ask that question sometimes on the way up. They ask that more on the way down. Yeah, so people who bought it basically came right back to the early entry. So a small gain has been wiped out, or if you bought, say, the short consolidation, you're down, say, 2 or 3%. Yeah, the 50-day line would probably be something which might be a place where if it would be like, that you might want to exit the position. I mean, that would be one possible place, and just have to see. It's just that's sort of the side when you have these up and down, when we have markets that go up for a few days, fall for a few days, different sectors move this way, overall a sideways trend. It's just hard because when you buy on strength, well, how far away is weakness? I mean, it's just tough. Now, if you bought the breakout from November, it worked out fine, worked out pretty well. I mean, there might have been a little spot where it came down toward close to the buy point, but sometimes they work and then sometimes they don't. We'll see what this one does.
Yeah, yeah. Buying right helps, and the initial breakout for Delta, like Ed said, was in November when it crossed this high of 62.91, and it did very well since that. Did come down and test the 50-day moving average. Did not retest this 62.91 entry. We hit that low of 64.40. Can recover. It did hold above some of these moving averages today, so we'll see if it can recover. That is Delta Airlines. Next, let's take a look at Apple, which just let the market know it is still selling a lot of iPhones. Had a recent positive response to earnings. Here's a stock that was up nicely today and did give back some gains here. Ended with a gain of 0.7%. What are we looking at in Apple here, Ed?
Yeah, and I've said this before. I was sort of poo-pooed Apple a little bit. Ah, what kind of growth is that? I mean, it just isn't. But now we've had a few quarters of accelerating earnings growth. It isn't world-beating, but hey, it's been accelerating, and revenue growth was the best in a while. And so that helps, and that over the last few
Hmm.
months, it's sort of gone sideways. The valuations come down a little bit. I'm sort of okay with this. I mean, obviously it's nice to close strong, but a couple more days and it could have a handle on this cut base. So if that could develop, I think that would be
Hmm.
nice, especially if the market is going sideways. It's one thing to sort of pause and hem and haw when the market is surging, but hey, one good thing about sideways markets is that you can strong stocks we may pause and form, nice little entries. So that's, and if it doesn't, if it blows by last week's high, that to me is a legitimate early entry, but it'd just be nice to have a full-fledged base. And the volume wasn't, picked up a little bit today. It was, just showing some solid action. Quietly, this has become the best looking Magnificent Seven stock, which isn't necessarily, which is a low bar now, but it to me looks, it's the only one maybe above the 50-day line, I think, right now.
Yeah,
And
yeah.
so so, have to take notice. And this is also not really too in the AI space. So, this is something you can play without being super concentrated in AI either.
Yeah, no doubt. And this is a great example, like Ed was saying, a great example of what sequential acceleration looks like. This is earnings over the past 4 quarters, and it is accelerating on a sequential basis. So 8% growth to 12% growth to 13 to 18, and then this last quarter ended in December. That 16% revenue acceleration from 8% for the September quarter. That's why the market was so enthusiastic, just to see that sharp acceleration in revenue from 8% growth in the September quarter, and then the weekly chart for Apple, just a longer term perspective. You just see a nice cup base taking shape here. A bit of an awkward looking pattern because it took several weeks for the left side to form here, and then they reported earnings, and then boom, just a couple of weeks to form the right side. But still, Apple is a breakout candidate as the stock is back up near all-time highs.
One
All right,
more
let's
point on this. Yeah,
start by taking
one
a
more
look
point
at
is
a stock that is. Oh yeah, sure.
one more point was just that this is a much smaller base. See, the prior base was sort of like, it was hard, maybe you could have bought it near the 40 week or something, but by the time it got to the buy point, it was making sort of had made a
Hmm.
big move. Sometimes if you have a sort of an awkward looking base and then another base forms next to it or just above, that can be, a little lower
Hmm.
risk, and so this is very common to see this kind of thing. It's only 16% deep after a 35% deep base. I mean, the RS line over time isn't great. That is a downside, but maybe it is ready to make another move.
Yep. Yep. No doubt. All right. Well, thank you for that. And let's conclude by taking a look at Google, a name that we have had in the model leaderboard model portfolio for quite some time. We put Google in the portfolio all the way back in early August when it was first starting to break out. But let's take a look at Google here and see that it's just a little bit below its 50-day moving average. Stock was down 2.4% today, but looks like it's ready to take a breather here after a breakout attempt, but not in big trouble here. But what do you see with Alphabet here?
Yeah, I think people who bought the breakout, that they're getting to that area. They're like down 5, 6% if they bought maybe the top of
Yes.
that sort of like high handle, they're down 8% or so. So there's decisions there. People who bought earlier,
Yeah.
you don't, yeah, this has been, even though the volume's been high, it still feels somewhat, the price movement hasn't been violent. I mean, the most violent thing was the earnings move, and it closed up and almost closed up for the day. Obviously, it's continued to trend lower.
Yes.
So again, longer term holders, no problem. I do think it's notable. It's clear that the hyperscalers are spending so much, and Google's announcement, how much they're spending. It's just, it's really hard to comprehend how many, just how much these names. So Google's holding up the best among these names. But if I just look at Amazon, that's sold off. Microsoft, that's sold off on their capex, and Microsoft didn't even raise things up too much. It's just pretty strong. Amazon raised it by a crazy amount, and Amazon, it's a little bit not as booming at Microsoft. And I think it's notable that and obviously Microsoft also has the whole software thing going on too. But boy, that it was
Hmm.
just coming up to an interesting area, and then foomf. And then Meta, which had such a strong reaction initially, well, that didn't hold. That did not hold. It's not terribly below where it was before earnings, but it's back below the 200-day line. So it's just something
Hmm.
there. The good news is that a lot of AI infrastructure names are getting a benefit because they're just spending so much money. We're seeing some of those chips. We're seeing some of those infrastructure plays, the energy plays. They're doing well. But it could be that these hyperscalers, they're really digging into the cash, or at least the
Yeah.
cash growth. That is, even for them, they're spending real money. Uh, and still have to wait to see the payoff for all those.
No doubt. Well, we do have some earnings reports after the close that we want to take a look at. Probably the marquee name and the highest profile name is Cisco Systems. You want to start with Cisco?
Yeah, let's start with Cisco. I mean, it beat views.
S-
Uh,
Okay.
the guidance I thought was sort of mixed, or sort of just in line, and often they would often beat views. I guide up a little bit, so I don't know. Maybe people are hoping for a little more. This may fall back into the buy zone after it run up a lot ahead of earnings. I mean, in that context, it's fine, but this is why you don't buy just before earnings, and this is not a huge move. McDonald's seemed to be pretty good news. They beat views. I don't know about their guidance. This was up initially and now is flat. So there was probably some early entries around the 320 area that it had already cleared. There's the whole
Hmm.
consolidation, so it's sort of in between that. And obviously still a lot of attention on app 11, even though this one has come under a lot of pressure. A lot of that's because of the software sell-off in general, not app 11's fault. But I think their guidance was somewhat mixed from what and I'm just trying to look at it very quickly. And obviously, this is
Hmm.
something that could easily turn around. I could easily see this one going up 10% tomorrow, down 10%, or do both. App 11 is prone to doing those kind of things too. So those are some of the bigger movers, as a lot of big names, but obviously we're through the biggest names.
Okay. Well, very good. So AppLovin under some early pressure here. Okay. Well, that's a look at just a few of the earnings movers. We appreciate Ed. Thank you very much for your input. Appreciate it as always.
Thank you, Ken.
All right. That's going to do it for today's show. Ed and Lexi they'll have your back tomorrow for the stock market today video for Thursday. In the meantime, for IBD Live tomorrow, Rachel Fox will be in the host chair. If you haven't checked out IBD Live yet, our hour and a half stock market show every morning from 6:30 a.m. to 8 a.m. Pacific time. Just go to investors.com/IBD Live to check us out. We would appreciate it. And that's going to do it for today. So, hope you have a great afternoon, everyone. Thanks for watching. We will see you back here tomorrow. Take care, everyone. Bye bye.